Welcome back to Market Day Report. I'm Chris Swift. We are getting at the top of the hour here and fixing to roll over into the noontime, and the grain markets have not been very friendly towards us. So let's take a look and see what we're trading at right now. Still lower, 433.5, just a half off the low of the day in the May contract. That's down 7 3/4. The July 446 even, down 7.5. That December now has slipped to 467.5, down 5.5. The beans have been a really volatile one. They've been all over the place and still are. May 11.95 1/4, down 1.5. The July down 3/4 at 12.09.5. Let's see if the November has done anything any different here. Probably not. We're still down 3/4 on the day at 11.85 1/4. And boy, we came within just a tick of that $12 handle. Chicago wheat's been really soft. We've heard all the news this morning of cancellations and really good weather coming in through the Midwest there. The May contract, 531 1/4, down 13. July down 12 at 546 1/4. Let's see what Kansas City hard red winter wheat's doing. Down 14 1/4 at 573 1/4. Been as low as 570 3/4. July at 567 even, down 12.5. And we'll wrap it up with Minneapolis spring wheat. Minneapolis spring wheat, 656 even on the May, down 7.5, all the way out to the December contract, down 7 at 679.5. Well, if you leave the door open too long, there's no telling what the cat will drag in. And here beside me, the cat has drug in Tommy Grisafi. So, Tommy, welcome to the show this morning.
First time ever sitting here.
Well, you look great sitting there, let me tell you.
We'll be back at 1 o'clock.
All right. Looking forward to the cow guy. You did a great job of it yesterday, and that kind of information is really important. We sit here and we talk about grains and we talk about livestock, and that's just a very small part of it. That's what we get our gross revenues from. But then we have expenses to pay for. We have to deal with money. All of that stuff, hinges right in what you're talking about.
Yeah. One thing yourself, Scott, the whole network's done a great job of is that there's farming, you think of producing the bushel, but the financial aspect of it is so large. Tomorrow we'll have to officially lock in crop insurance. That's a big deal. And then we have one more layer that we can add to that risk management. We say we're in the risk management business, but risk is moving and things are changing.
Sure.
Wars are breaking out. 4 years ago, here in a few weeks, it'll be the 4-year anniversary when crude traded negative 37. Yeah. So when a farmer or rancher says, Tommy, how low can something go? I say, well, I once remember this really happened, right?
Yeah, absolutely.
I physically bought crude oil at negative 30, right? And so things have changed. Risk has changed. We're 4-year anniversary of the pandemic, and it's a new world.
Right.
But you guys are doing a great job just getting that information out there. When I look at my quote board today, Chris, there's a lot of moving pieces from where we had that PPI number this morning to where we are now. We initially had that reaction, then stock market just digested it really well and went up. Then it went down. But when I look at my quotes today, it looks like a risk-off day. When you look at grains, cattle, gold, there's one thing that's bothered me. Well, there's a lot of things bothering me. But when it comes to markets, there's one thing that's bothered me a lot. The price of crude oil is above $80. And I think that's a significant big deal when it comes to the consumer and just the overall health. There's nothing that you've ever bought that didn't get delivered in a truck.
Absolutely. And, we didn't see that because right now at planting season time, the diesel fuel, really huge, important part of it. We're up about 20-something cents over the last 6 weeks in diesel fuel. And we know at the pump, it's always retail. It's going to be a little bit heavier there. There is just no shortage of risk that these are having to do. And I noticed the input cost of everything. And you and I talked about this yesterday for a little while. The input cost of everything is just higher out there, and it doesn't look like we're going to get much reprieve from that. And now with the finished product, the corn, the soybeans as we're harvesting, even the cattle, although they're really high right now, all of those things can change dramatically in a very short period of time, because it's a commodity market and it's inherent with the risk of the weather, of government actions, and of, unfortunately, actions of people out there.
Yeah. One thing I learned from you on a podcast, it was the one thing I learned. You were talking to Chip Flory and you said that it has never been more expensive to produce 1 pound of beef. That's still correct, right?
Absolutely it is.
All right. And when I look at my quotes today, the bond market's down. Bonds have pretty much taken out a lot of those interest rate declines. So interest rates seem to stay elevated. So farmers and ranchers right now are out there getting their operating notes. They're locking in crop insurance. And with all these expenses you talked about, those are those headwinds that are concerning me in agriculture.
Absolutely. Tommy, stay away. We're going to go away, take a real quick commercial break. We're talking with Tommy Grisafi. You stay with us. Risk is inherent in commodity production. It can't be eliminated, but can be managed. With over 30 years of experience, Swift Trading Company has the knowledge and provides the service to meet producers' needs. For more information, visit swifttradingco.com. All right, welcome back to Market Day Report. We're talking to Tommy Grisafi. Let's take a look at our livestock so we'll have something to talk about here. And we're going to just talk to Tommy now. So there they are right there. Ooh, still down 220 on the April contract, 187.72. Still about 40 off the low of the day. The June down 182 at 184.22. Dees down 122 at 189.87. Feeder cattle market, it's been soft all day. Still is, but not. It's not below $3 still. March down 177 at 248.50. The April down 257 at 253.27. All the way out to that SEP at 269.55, down 202. Take a look at our lean hog market. Got a plus on the day. The April up 25 at 85.12. The June down 42 at 101.30. Out to the July down 32 at 103.40. Tommy, we've seen all kinds of action in this cattle market. Again, you and I had lunch yesterday. We talked about the risk that is involved in here, and I look at it as a large transfer of risk just because of the amount of volume that we're trading here. It's abnormal. We missed a couple of weeks in January. It really fell off big, but then when we came back roaring, and seemed like we've traded a lot more cattle out there. So that risk is now shifting hands, and fortunate and unfortunate, those that are selling are really enjoying a high price, and those that are buying it, I don't know if they're really enjoying that high price or not yet.
Well, one thing we have to remember is that we're so lucky to live in a country where we have futures and options, and This isn't a promotion for futures and options. I did see a guy run an ad right before this, but we could sell stuff. It's not illegal to sell futures. It's not illegal to take off risk, and there's countries, people who are in agriculture who don't have the access to products like we do. My concern for the agricultural markets, in particular cattle and hogs, is does the American consumer have enough money to keep buying meat at this level? And as crude oil goes up, as we said on the first segment, makes me nervous that the American consumer is going to be getting tapped out. And you see that various numbers, economic data that comes out. The American consumer is getting buried in debt, and we need everyone to be able to afford to buy high quality beef and pork, but I can't say that that these prices are necessarily affordable for anyone who's struggling. Right. And there's a lot of America who is struggling or retired and on a minimum, a steady income budget, whether it's government subsidy or something else.
Well, and we all like to go out to eat. That's one thing I really enjoy. And we don't do it very often, but when we do go, we like to go somewhere and enjoy it. But we saw the CPI this week showed us that on the grocery store stuff, up 1%, but at restaurant, that inflation was up 4.5%. So that eats into it a lot. So, Tommy, I'm really looking forward to your cow guy this afternoon. I can't wait to get it. And, Suzanne, it's now back to you.
Now back to me. Looking forward to seeing Grisafi, Cow Guy Close, back at, of course, at 1 o'clock Central.